Everybody on Facebook just got to be finding about the best kind of investor. Like, why does it matter? All that matters is that we're all trying to build wealth, well, together. What's up, everybody? This is your boy Nick, back at you from Winning Lifestyles, here to talk to you today about the 5 types of investors you'll see out there, with a few special mentions. Now, if you like our content, please do us a huge favor. Take 5 seconds to just hit the subscribe button, smash the like button, and please ring that notification bell. It really helps us and the YouTube algorithm get the word out so that we can help more people get started on investing. So let's go ahead and dive in. Number 1 is the value investor. This is like the most common, well-known type of investor out there. We're thinking like OG, Warren Buffett, Charlie Munger, and they just know how to see potential in a company and buy it at a price that is good, that they know will last long term, so that 10, 20, 30, 40 years from now, they're gonna be able to get a huge return on their investment. And if you're looking for like great resources on how to check this out, what those really mean, really understanding the fundamentals of evaluating a company's financials and everything, 2 great authors and investors that I really like are Danielle Town and Phil Town. They have 2 great books, Rule Number 1 and Invested. I've read both books at least like, oh gosh, 3-4 times now. And they really talk to you not just about how to look at a company, understand things like PE and your EPS and all that good stuff, but also talking about the mindset that you have to have, like being able to get into the zone and figure out what kind of companies do you really want to look into. Now that takes us to investor number 2. These are our dividend investors. The most notable one out there on YouTube is Andrei Jikh. Love his content. You should definitely check him out. He does a lot of magic and investing in money all put together. But it's just amazing how much he's grown his portfolio through dividends. Now, if you don't remember, dividends are basically a payout that the company gives you on excess money they have in their financials. And it's like kind of how you can grow your stocks if the stock price doesn't just skyrocket up. Like if we're talking about AT&T, ticker symbol T, you'll see that they basically have stayed pretty steady at their price for a while as of, well, December 2020, but they pay a very consistent dividend. These companies, you're looking to just have them pay out either quarterly, monthly, some do it like biannually. But the idea is you buy and have so many shares of it that you can basically replace your monthly or weekly income. And if you have it set to drip, basically automatically reinvest in itself, it starts to compound. So your shares end up buying more shares, which buy more shares, and at the end of the day, you're gonna be left with a huge pot if you were careful, you picked the right dividends, and you really made sure to do your research. The 3rd type of investor we're going to talk about today is the growth investors. So these are the folks who are like on the Tesla, Amazon, Chipotle bandwagon, like the ones that are just going to go up and up and up to the moon because they believe that these stocks are just going to skyrocket overnight. Like we saw how Tesla had an amazing run in 2020. I still regret looking at the price when it was below $600 a share way back in March, and I didn't jump in, and it skyrocketed all the way up to $2,000 before their stock split, and then they still went on a continual rise. Like, oh my gosh. Same thing with Nvidia this year. There were just so many chances to jump in and see these stocks just take off, grow because of a great product. And there's like a small hybrid, the growth dividend investors. There are some stocks that do pay a dividend and also grow. Some notable ones are like Qualcomm and Nvidia. They both pay dividends and they have a lot of potential to grow in the future. Now, the 4th kind of investor out there are our long-term index fund investors. This is like J.L. Collins and The Simple Path to Wealth. Absolutely love the book. Should definitely check it out if it's going to be your first book jumping in. And I think that if everybody's going to start somewhere, it should be here because this is the one that's very low maintenance. If you don't know what to do, don't worry. Just stick your money into different index funds with the right allocations, and then you don't have to think about it long term. So make sure you're doing your own due diligence, figure out your own number, but things like the S&P 500 or the total stock market fund, or if you want to buy some bonds, the total bond market fund, there are so many out there. Notable ticker symbols are like VTI for total stock market fund, VOO and SPY for the S&P 500, and also QQQ if you're really big on tech stocks. Really got to give a shout out to Rose on Investing with Rose for diving in and really giving some great content to talk about what these are and how simple it is to just sign up for that brokerage account, sign up for your IRA, and just get started buying some index funds within minutes. Now, our fifth kind of investor that we see a lot on Facebook is the real estate investor. Now, this one's a little bit hard to get into if you're just getting started because it requires a lot of capital if you're doing it by yourself, or if you're trying to look for like a syndication or a group of investors to all pull money in and dive in. Again, you're gonna have to have a little bit of money depending on how you wanna do it. There are so many different ways. Like a lot of folks think you just have to be a landlord to come in and buy, but it's not always the case. I mean, you could do it as a wholesaler, use that money, come back and buy some more properties that way. You could instead hire property managers to do it. Like Meet Kevin and Graham Stephan do a great job talking about all the different ways that you can really get into real estate investing super early on, especially if you're just getting started, you're buying your first property, maybe think about house hacking. But essentially the idea is that you own some kind of property and you're gonna rent out that property to somebody else. Now, if you don't wanna do all the legwork, having the handyman, finding the valuations of everything, and doing your research about different communities, locations, growth projections over so many years, checking your cash flow, don't worry. You can also buy something called REITs, which are real estate investment trusts, through like some form of a stock. And there are a lot of different things like Fundrise out there. You could just put up money and it's just paying out a dividend long term. Which now gets us to our special mentions. Now, I'm not sure if we can really call the next two investors, but let's just label it as something anyways. So, day traders versus swing traders. Keywords are they're traders, not technically investors, which implies that you're gonna put some money in and, you know, wait for it long term and it's gonna keep making more money for you. At least that's my understanding of it. Like, I'll be honest with you, everybody defines it a different way, and if you Google it, you'll find like 10 different things that they all say, whether it's an investor, not an investor. But I guess the main point is it's a way to generate some cash and, well, to build wealth. So as the name implies, day traders are basically like stock traders. Really big ones are Humble Trader and Steven Ducks on YouTube here, and they're really great at basically seeing patterns in charts, really understanding a technical analysis for how things work. They do some research and understand financials of different companies. There's like so many things that go into it. I wish I had the time to figure it out, maybe like one day, but they're buying stocks and they know their risk levels, and essentially they're able to, you know, trade in and trade out of the stock really quickly and then cash in on huge returns, or even do things like short selling stocks, basically selling stocks they don't currently own. They're kind of just borrowed from the brokerage. And then what ends up happening is if the stock suddenly goes down a ton, then they can buy back at the lower price and then just kind of take the difference. Swing traders, on the other hand, are typically the folks who don't have the $25,000 minimum. So there's this weird thing where if you don't have 25K, what ends up happening is you're limited on how many day trades you can make in total. So, you know, what they'll do instead is they'll think, okay, I'll buy the stock now because I know it's gonna go on like a skyrocket over the next day or two. So I'll buy, hold, and sell it in a very short-term kind of idea. So like maybe a few days later, maybe a week later, they're just gonna sell it off after it got a huge profit and then put that money back into another stock that they know they're going to see some gain. And it's just like churning that way to try and make some money in the long run. And what we all eventually want to be are angel investors. So these are the folks with so much money, so much extra cash that they can go and invest in companies very, very early on when they're still at like their startup phase. Now, Naval right now has a huge thing going on with how to do angel investing. And basically you can evaluate whether or not you see this company is gonna like do well long-term and get in on like the ground floor. You have so much money that they will come pitch their ideas to you and you can decide, do I want to give them some cash and try and help them achieve their dreams? All right, so those are the big investors that I keep seeing over and over and over again across Facebook, Twitter, basically the entire personal finance space. Whatever kind of investor that you want to be, doesn't matter. Pick what works best for you that you really vibe with, and remember that the end goal is just to build enough wealth so that you can control your time and, well, be free. Thanks again, everybody, for checking out our video. We here at Winning Lifestyles are just doing this for educational purposes, for funsies. We're not financial service advisors or anything. So please, please, please do your own research and due diligence before diving jumping in and betting everything and getting your name up there on Wall Street Bets. This is Nick signing off until the next video.